All right. Good afternoon. Good afternoon. Good afternoon. How you doing? How you doing? How you doing? This is going to be an extension of the conversation that we had on yesterday, and we are going to we're going to address some discrepancies. I've gotten a lot of comments, messages, and things of that nature. So, if you can, please make sure that you share the live. Please make sure that you share the live. Make sure that you comment. If you have any questions, drop the comment. I'm gonna try to answer them. But today is going to be one of those days where, again, it's going to be a sort of like a repeat from yesterday indirectly, but more specifically, to try to get people to understand what an LLC is and what it is not, right? Most people believe that whenever you have an LLC, the LLC is a legal separate entity. If you believe that an LLC is a legal separate entity, again on YouTube or on Facebook, if you make the comment on Instagram, I'm not able to see it. But if you leave a comment, I want to know: do you believe that an LLC is a legal separate entity? Again, there's no right or wrong answer at this moment. I'm going to educate you on it. So I just kind of want to know your thoughts. So if you believe whenever you open an LLC that there's a separation there, meaning that if someone sues the business, they can't come after your personal assets. If you believe that that LLC separates you, just go ahead and type me in the comments, please. Just type me in the comments if you don't mind. Again, this is for educational purposes only. This is for educational purposes only. Hey, Jay, how you doing? Hey, cuz, you here? Thank you, thank you, thank you, thank you, thank you. Y'all have no idea. To have family watch you, it means a lot, y'all. It means a lot. So thank you, cuz, for coming in. Miss Kim Fields, ladies and gentlemen, the one and only Zamar. What's up, man? Boy, I can always count on Zamar. Zamar is an active and AJ, y'all active clients, man. I tell you, to have the support is extremely important. So cuz if you can hang around for about good old 10 minutes for me. Just good old 10 minutes. I'm gonna jump right into that. So again, the question was, do you believe whenever you get an LLC that if someone sues the business, they cannot come after your personal assets? If you believe that, just go ahead and type me in the comments. And today is going to be an informational session where we are going to educate. Now, let me go ahead and address the elephant in the room. I know sometimes it's hard for us to get past the messenger to hear the message. I know I may not look like everyone's cup of tea. I understand. And generally, when you don't look like everyone's cup of tea, they tend to challenge and question and ask, well, who the hell are you? No, you can't answer, Zamar. You are forbidden from answering. So just know that just because the messenger may not be what you want that person to be or look like what you want them to look like, that doesn't change the message from being true or not. So here we go. So I'm gonna go ahead and hit, let the dagger hit you right in the side real quick, and then we're going to unfold this thing. So typically when people go open a business, right, the first thing that we do, they don't even ask the question, is the LLC the right thing for me? The first thing that people do is go get an LLC, because why? People were told it's a limited liability company. That means my liability is limited, and man, that is so far from the truth. Man, especially when you run that business by yourself, when you are a single member LLC, let me tell you, things start to change a little bit. So here's what I'm going to do. I am going to go through the process, right? And especially in the state of Louisiana, hear me and hear me closely, especially in the state of Louisiana, you got to get your EIN before you register that business with the Secretary of State. So when we go through the process of registering our business to get an EIN number, here's what happens. It's almost like clockwork. We log on to the irs.gov and we click apply for the online EIN. People should know by now LLC is for a purpose and not building wealth. Well, Miss Stone, you would be surprised. So anyway, we're going to go through the process of getting an EIN number, and I'm going to the irs.gov and I'm going to go ahead and apply for an EIN number. All right. I'm going to go ahead and click apply. And I tell you, man, we always say you hear it in church, you hear it in school, you hear it in family gatherings. If you want to hide something from somebody, put it in a book. Well, we already think that the IRS is the boogeyman, so we're not going to read. But let me go ahead and educate you all on something real quick. For all of the people that believe that you have to make a certain amount of money to choose a certain type of structure, that's a lie. The jury determined that is a lie. Because before you can accept money from a client, before you can conduct business, you have to go open the business. You have to register it and apply for an EIN. So it says, right? So the idea that you need to have a certain amount of money before you choose anything on this paper is a lie. There is no income requirement to select anything on this screen. All right. So when you select limited liability company, now I get it. I know we got some real smart people out there, and sometimes we are so smart, we're smarter than the people who wrote the tax code, right? I understand. So when we select limited liability company, let me go ahead and tell you what happens. The IRS is so gracious enough. They tell us, hey, since you have chosen the limited liability company, let me tell you what it is. So the IRS goes down this list of things that says what it is. Now, it's a structure allowed by state statute. What does that mean? That means there is no federal tax bracket for an LLC. It does not exist. There is none. It won't ever be one because you only can get this at the state level. Secondly, it's formed by filing in articles of organization. Like you have to just figure out how you're gonna organize your closet, right? And it tells you all the things that it is. But here's what the IRS is also gracious enough in doing to tell you what it's not. LLCs are not incorporated. They will never be incorporated. They do not file in articles of incorporation. That's in black and white. Well, I'm sorry. This is blue and white. But the LLCs are not incorporated in black and white, right? And when you see that it says LLCs are not incorporated, here's what it means to be incorporated. You ready? A business is incorporated. Let me go ahead and make this bigger so that way everybody can read it at the same time. A business is incorporated when it has been granted a charter legally, recognizing it as a separate entity, having its own privileges, rights, and liabilities distinct from other businesses and persons. Now, I know, y'all, I know that the natural thing to think is the IRS is wrong. I know, because you've been told this whole time that it's a separate entity. Well, I'll be damned. Now, how is it that you were told something, but the IRS says something different? There's a slight contradiction right there. And I know, y'all, it's very hard for some people to just swallow this pill as truth, right? But I'm going to go ahead and show you how the IRS double downs on that particular perspective, right? So what happens is people still go down the path of getting an LLC, and then lo and behold, we go to file taxes. You know, taxes seems to be the one thing that people hate, but yet is the most common conversation. How much do I have to pay in taxes? Well, let's back up a little bit. So since we've already discovered that EIN number that you went get, that you probably shouldn't have went get, you know what? Let me stop right there for a second before I even go to the taxes. So I would be willing to bet, we got a few people that are watching. I would be willing to bet every dollar in my wallet right now that there is somebody right now that went to get an EIN, and I can tell you, you shouldn't even have one. Let me show you why. Because the average person doesn't even go to the Internal Revenue Service and ask the question, do I even need one? Do I need an EIN? Now, you see, if we really get down to the nuts and bolts of why people won't get that EIN, chances are they won't get it just because somebody at the bank told them they needed it. Somebody cousin said you probably should get one, but no one went to see what does it mean to have one? What is an EIN? Why do I need one? Should I have one? Well, let me help you with that. An EIN number stands for Employer Identification Number. An employer has employees. Employees are people that you pay. And every single time that they receive a paycheck, federal, Social Security, and Medicare taxes are taken out. They are issued a W-2 at the end of the year. So what does that mean? That means that if you are paying someone using Cash App, Zelle, Venmo, you know, you pay them in quarters, you pay them in nickels, you write them you write them a check, you even give them a money order, or you don't pay them at all. If those are the people that you pay, they are supposed to get a 1099 at the end of the year, but they do not constitute and to be an employee. So the IRS says you will need an EIN if you answer yes to any of the following questions. So that means the IRS is going to give you a list of questions. And as long as you answer yes to any of them, then the IRS says you qualify to have an EIN. If you don't qualify to have an EIN, you should be using your Social Security number. But you thought, nah, I don't want to get to be my Social Security number. That's going to tie me to the business. Well, you were tied anyway. But I'm going to get to that. So the first question that the IRS asks is, do you have employees? Yes or no? Most people can't even answer yes. The second question that the IRS asks, now here's where it gets good. This is for everybody who thinks, I got me an S Corp. There is no such thing. You cannot go register your business with the Secretary of State as an S Corp. It does not exist. You're either a domestic limited liability company or a domestic corporation or a partnership, right? Because the next question says, do you operate your business as a corporation or a partnership? If you started your business as a LLC and you registered that business at the Secretary of State as an LLC, the answer to that question would be no. The next question, do you file any of these tax returns? Employment, excise, alcohol, tobacco, and firearms. If you don't file any of these tax returns, the answer to that question would be no. Do you withhold taxes on income other than wages paid to a non-resident alien? Some people don't even know what a non-resident alien is. So the answer to that question would be no. Does your LLC offer what's called a KEO plan? In layman's terms, it's a retirement plan, a pension plan. And is your LLC involved in a trust, an estate, real estate, mortgage, investment conduit, a nonprofit organization, a farmer's co-op, or a plan administrator? If you could not answer yes to any of these questions, you, my friend, as a single member LLC, should not, under any circumstances, have an EIN number. Well, the bank said I needed that to open their account. Last time I checked, the bank didn't write the IRS tax code. Last time I checked, the person at the bank probably don't even have a business that they own themselves. But again, who am I? I'm just a little old guy reading the IRS to you. So Now, let's show how some of this really works in real life, right? So, in practicality, what happens is I'm going back to that tax conversation. So, typically, when people say, I don't want to owe them people no money, well, that was your first mistake right there. The second mistake is when you went to get a loan or you tried to apply for a loan, right? You said, well, why is it that I got to give my personal information if I'm applying for something for the bank? And the bank is simply saying, I'm only going by how you are registered. See, everything that you told me about your business, hold on. Let me pull something up for y'all. Don't go nowhere. Don't go nowhere. Let me pull something up for y'all as an example. So back in 2017, when I didn't know no better, I did what everybody else do. I went open my consulting firm as an LLC, and here it is on the screen. You see, it says Mac Enterprise Consulting LLC. And then underneath it, it said Dwayne Williams, sole member. Now, here's the logic. I'm not going to say common sense, but here's where logic comes in. How can you be separated from anything that has your name on it? Imagine being pulled over by a police officer, and the officer says, Sir or ma'am, let me see your driver's license. You gladly pull out your driver's license that has your name on it, and you tell the officer, Nope, that's not me. That's not my name. Although it's my picture, that's not my name. Right? You would have a hard time convincing the police officer that that's an accurate statement. So when you are issued a paper for your business, that employer identification number that has your business name, LLC, and your name on it, you cannot be possibly separated from something that has your name on it. So here's where you start to connect the dots, right? I'm going to show you the paper trail that you left that you didn't even realize that you left. So number one, when you registered your business at the Secretary of State, the Secretary of State is a public database. That means anybody can go look up your business and find out who you are, what's your address, and all that good stuff, right? So if I log onto the Secretary of State and it says LLC, well, naturally, let me see your paperwork, right? The next thing that you're going to do when you go apply for a loan, they're going to say, let me see your finances. Let me see your tax returns. So here's what you did. We all file taxes on an IRS form 1040. Yeah, I know you got all these tax gurus out here and your CPA and all these people that's telling you this, but let me help you. I'm not trying to make you a tax professional. I'm just trying to get you to understand how the dots connect. Whenever you file your personal taxes on a 1040, that is called your U.S. individual income tax return. That's your money. That's for you all day long. Ain't nobody else's. So when you start to tell the Internal Revenue Service what's your name, what's your last name, what's your filing status, and all of that good stuff, do you have any dependents? We get down to the nitty gritty. The IRS say, tell me about how much money you make and where you got your money from. So you normally have a job that you work from 9 to 5, and you are issued a W-2. So they're gonna put that right there. That whatever that number is going to go right there on line number 1. And then if you have any other money that you make, from different various forms of entities and things of that nature, what you're going to do is you're going to list that amount on line number 8 of your tax return. And I'm going to go ahead and make the screen a little bigger so people can understand, right? So right here on line number 8, is this live or is pre-recorded? It's live. I'm waving. Hello, it's me. I'm Dwayne. On line number 8, it says additional income from Schedule 1, line 10. So what the IRS is saying, tell me about any other money that you have coming in. All right. So we go and we pull up the Schedule 1. And let's see what type of income the IRS is asking us to report. Cool. So as you can see, Schedule 1, additional income. Here is where if you had any type of taxable refunds or credits, if you were paid alimony, if you have rental real estate, farm income, unemployment income, gambling, jury duty. But you also, here we go. You also have a line that says business income or loss. Now, here's where things get good because you are supposed to attach the Schedule C. The Schedule C is designed for you to tell the IRS everything about your business. Now, I know you just give your tax return, your tax information to your tax professional and say, here, I don't want to owe them people no money. That's what you typically do, right? But if you ever took the opportunity to look at your tax return and to look at your business income or your losses, here's what the IRS is very clear about right now. Remember, you called yourself an LLC. That's what you said. If I asked you how your business is structured, you're going to say, I'm an LLC. That's what you're going to tell me. But how is it that, hold on. At the very top of that Schedule C, it says profit or loss from business. And then underneath it, it says sole proprietorship. Well, I'll be damned. This whole time I'm going around telling people that I'm a LLC, but yet I'm being taxed as a sole proprietorship. Make it make sense to me. I'm about to. See, this is going to be pretty heavy for some people because I get it. All your life you were told that an LLC was the way to go. I get it. I understand. But I'm trying to help you. So the profit or loss from business sole proprietorship, well, what is a sole proprietorship? Well, I'm glad you asked. Let me go ahead and pull up the definition for you so that way you can read it for yourself because I don't want you to think that I pulled it from somewhere. A sole proprietor is a person who is the exclusive owner of a business. And I'm going to stop right there. I'm going to stop right there. I'm not going to even read the rest. What this is simply saying is you are the only person that own that business. Ain't nobody else. It's just you. Ain't that contradictory, ain't it? How is it that I'm a sole proprietor on one end, but I'm a LLC? That's because you don't know what the LLC is. And I'm going to explain it to you. But whenever you put your business income, losses, or deductions on a Schedule C, you are seen as a sole proprietor. You are the exclusive owner of that business that is entitled to keep all profits after you pay the taxes, but liable for all losses. Now, here's where it gets interesting because most people pass by that liable word, limited liability. Hold on. Liable means responsible by law, legally answerable. So whenever you place your business income on a Schedule C, here's how the IRS is so clever in saying what's happening by paraphrasing. They said, look, on line C, tell me your business name. On line A, tell me what type of business you do. But before you can even tell me all of that, tell me the name of the proprietor. Tell me the name of the person who is the exclusive owner of this business that will be responsible to keep all the profits after they pay me my money, but will be responsible for anything that they report as a loss. Okay, cool. Here we go. So then you get down to the income section, into the expense section, because you were taught write everything off. You don't even realize how words have meaning, words have power. And I'm going to get into that a little later. But you put all of your business income and your expenses. So for the sake of the conversation, let's say you had $1,000 of income and you had $500 of expenses. On line 31, you would have had a net profit of $500. But if you had $1,000 in income and $2,000 in expenses, you would have had a loss of $1,000. Either way, let me make it make sense to you. So when the IRS said LLCs are only allowed at the state level, it's a structure allowed at the state statute. What they're saying is there is no federal income tax for that because it's at the state level. So what happens is when you fill out your business income and expenses, right here, if you ever hear the term pass through entity, this is where the pass through, the handoff, this is where it happens. Instead of this business paying taxes, because there is no tax for an LLC, you about to take whatever's on this paper and hand it off to its rightful owner. Hold on. So this number leaves this page and it goes back to the Schedule 1. So if I go to the Schedule 1 and I place Schedule 1 and I placed it, it was handed off to the Schedule 1. And I placed it right here. So at the very bottom of Schedule 1 on line 10, it said combine all those lines and put that on your 1040, line number 8. Here's the handoff again. Whoop, hand it right off. Since that business ain't about to pay no taxes, somebody got to pay taxes. So we go back to your individual income tax return. And again, I don't like when people say use common sense, because I know that this is offensive to some people. But we're going to say, let's just use logic for a second. If I just took all of that business income or loss and I passed it off to line number 8, here's what line number 9 says. After I place that number on line number 8, line number 9 says, I want you right now to add lines 1, 2, 3, 4, 5, 6, 7. And it's amazing. Ain't that something? Hold on. It's amazing. Ain't the English language so impressive? They put a comma after 7 and they wrote the word and, because what they was trying to get you to understand is, hold on. Don't forget about line 8. So they were boldly 1, 2, 3, 4, 5, 6, 7. Hold on before you run too fast. And 8. Now here's the interesting part. Ain't it? Think about this for a second. Look at all the words on the page. They're not bolded. But ain't this something? It says this is your total income. They wanted to emphasize that. This is your total income. Now help me understand something, y'all. This whole time you going around telling everybody, I got my LLC. It's separate. It's separate. How you separated from something that you just took responsibility for? You just reported whatever that business did on your U.S. individual income tax return. That don't say U.S. in our tax return. It don't say that. It says individual. That's you. That is you. That's your first name, your last name. If you got a spouse, that's their first name, your last name. This is what is being reported. What you have just said, that, hey, when it comes to that business, come to me. I'm the head honcho. I take responsibility. So now, since you did all that, here's what happens. You took that tax return to the bank to try to get a house, to try to get a car, to try to get anything. And they said, well, sir, well, ma'am, I need you to co-sign. I need you to personally guarantee. And you're saying, why? Well, the bank is saying, well, ma'am, well, sir, I asked you specifically to give me the business information. You gave me the business name, you gave me the business address, and I asked you for the business EIN. That EIN has your name on it and it has the business name on it. I asked you for the business finances. You gave me your tax return. Sir, ma'am, I'm not trying to discriminate against you. I'm just saying I'm going by what you told me. Some people think it's always a black thing, a white thing, a male thing, a female thing, a rich thing, or a poor thing. No, this is just logic. Because let me help you, okay? Let me help you. See, now I'm about to give y'all a history lesson. And I said I wasn't going to do it, but I got to do it because I realized somebody that said that they used to work for the IRS is in the comments. And I got to do it. I got to do it just because. Thank you, Miss Shanice. I appreciate you being here. So let me give you all a history lesson, okay? Back in, let me help y'all now. Now just follow me. Back in 1970, Our good old President Nixon. Mhm. President Nixon signed what was called the Bank Secrecy Act because we, as the United States, wanted to be the big dogs. We wanted to know any type of financial deposit over $10,000 was being done. We needed to know who was doing that. Now, if we trace back, why did that even become a thing? Well, you have to go back to the days of money laundering. You see, what most people don't understand, where we at? Hold on. Nope, I'm coming. Wait, hold on. There we go. What most people don't understand, and I know this might be over some people's heads, but just follow where I'm going with this. See, back in the day, there was a good old country called old place over there called Colombia. And there was a man by the name of good old Pablo Escobar. See, Pablo Escobar was known for trafficking. Him and the Cali cartel, they were known for just pushing things in the United States, and they were crossing that good old Panama Canal. Panama, right? Remember the word Panama. Okay. So since all of the drugs was coming in, the cocaine, the marijuana, all of that was coming into United States, all of the money couldn't be traced. So they were making cash deposits like it wasn't no other. Everybody was getting a deposit. And then there was a time when you can go buy money orders without having to give your ID, right? So good old America said there's nowhere in the world all of this money. There's no way all of this money can come into the good old United States and we not get a piece of that. So what we wanted to do was try to figure out how can we trace this money? Who's making all of these deposits? So then in 1970, the Bank Secrecy Act was formed. Now, interestingly enough, the first LLC, now this is where it's going to get good, y'all. The first LLC, hold on. The first LLC began in 1977. Ah, ah. Let's go ahead and read a little bit of history real quick. Now I know. Hold on. Hold on. Un momento, por favor. History. There we go. Look at what it said in the history. The first state to enact a law authorizing the creation of a limited liability company was Wyoming in 1977. The law was a project of the Hamilton Brothers Oil Companies. Here it goes, which sought to organize its business in the United States with liability and tax advantages similar to those obtained where? In Panama. You got to understand the limited liability company, I'm going to read it again, was the creation of limited liability companies in Wyoming. The law was a project of the Hamilton Brothers Oil Company. The point being, they were trying, that's where the whole shell corporations come from. These old, shelf corporations, all this stuff that you hear, all of that came into play because they were trying to create the laws that would protect these two people from getting into business with one another. So now I'm going to take it a little bit step further. Hold on. Now, I know some people don't even care to hear this, but I'm just trying to help you so that way you can get some context. This is why When the IRS said a limited liability company is a structure allowed by state statute, and they also stated that each state may use different regulations, here's what they also stated. Do you see? Owners, plural, of an LLC are called members, plural. It's amazing that even in its inception, they were talking about more than one. They were talking about more than one. So if you are a single member LLC, meaning that you own it by yourself, here's what the IRS further said. An LLC with only one member is treated as an entity disregarded as separate from the owner. And they got a comma right there. What does it mean to be disregarded? Hold on. The definition of disregarded, it says it right here, means to pay no attention to. Let me make it bigger. To pay no attention to, ignore. Here's the point that I'm trying to make. The intent of the LLC was always for two or more people. That's why the IRS said owners are called members. The definition of a member is a person, animal, or plant belonging to a particular group. The IRS also said that whenever you have an LLC, you have what's called an operating agreement. Hold on. Hold on. Agreement definition. A negotiated and typically legally binding arrangement between parties as to the course of action. How can you, as a single member LLC, be in agreement with yourself? You can't. That's why the IRS calls you disregarded. We pay no attention to you. We ignore you. And in fact, whenever you file your taxes, you're going to file your taxes using a Schedule C. Therefore, I'm going to treat you, view you, handle you, and deal with you as what? You by yourself, sole proprietor. See, the issue isn't that you had a bad business idea. I believe most of you all have great business ideas. The problem is you're trying to build something off of something that was meant for two or more people by yourself. If you don't believe me, watch this. You ready? Words have meaning. Words have power. The definition of limited, hold on, is to be restricted in size. Amount, extent, few, small, or short. Hold on, I ain't finished. The definition of liability. Wait. It says the state of being responsible for something, but here's where it gets good. It says a person or thing whose presence or behavior is likely to cause embarrassment. Here's the nail. Here's the hammer hitting the nail. Or to put one person at a disadvantage. You will always be at a disadvantage by yourself. You will always have to personally guarantee something when you classify yourself and take responsibility as a sole proprietorship. You're doing yourself a disservice. So now the next question becomes, how do I change that? Well, here's the thing. If I asked you, do you want your business to be a separate entity, meaning that if the business is sued, do you want them to come after your personal assets? You would tell me no. If I asked you right now, every time that you go get a business loan or you apply for something for your business, do you want them to pull your credit report? You would probably say no. Well, in order for you to do that, you have to create an entity that is separate from you. You have to, for example, you have kids. You are a person, your kid is a person. Two separate entities. So the only way that you can actually separate yourself from the business is to make sure that you go get a business that is separated from you. And here's the one thing about that very IRS that you didn't pay attention to. They said that whenever you hear the term United States person, they're talking about a citizen or a resident, a partnership. When two come together, they are one, or a corporation. That means, I'm telling you right now, by law, if you take a corporation to a bank, that corporation right now is to be treated, handled, dealt with, and viewed as a person all by itself, which means them asking you for your personal information is irrelevant. Because why? If you go back to get the EIN, look at the paper. Do you see how it says Mac Enterprise Consultant Incorporated? My name nowhere on there. But I get it. Everybody worry about, well, what's the tax implication? You see? Do you see? Is no winning. All you worried about is taxes. Do you know you file your taxes like next year for this year? You do know that, right? That means that you have to operate January through December. How are you operating January through December? Now, I'm about to give you something that you probably never seen before, but I'm gonna help you and I want you to feel me. So that means that if a corporation is a person, catch this. If I ask you right now, do you have 5 people that you can go borrow $1 million cash from and they don't ask you one question, chances are you'll probably tell me no. Well, that's because you don't understand what a person is. You see, I just told you the term United States person. Uh-oh, we getting somewhere. We're warming up. Is a citizen or resident, a partnership, or a corporation. That means that that corporation can be a person. That means I can possibly find 5 corporations to go borrow money from. Or Dwayne, how am I going to go borrow money from that corporation? Well, you got to understand how to layer things. See, this is how wealthy people think. You see, hold on. You see a big 60-foot building, 15,000 employees, and the IRS ain't never said that. The IRS said a corporation is a person. So since the IRS said a corporation is a person, well, let me deal with it. Now we can start to talk about building legacies. This is where you talk about financial freedom. Here's why. Now I'm about to give y'all something. Take your pen and your paper out. What I'm about to show you, they don't teach you this in school, and I can promise you that. They taught you part of it, but they didn't tell you how to string this along. So here we go. So since a corporation is a person, well, we have to understand a few pieces of terminology. Number one, first piece of terminology is a word that's called, most of us hated math in school, but this is actually relevant. There's a term that's called accounts receivables. Uh-oh, uh-oh, uh-oh. Accounts receivables. Well, Dwayne, what is accounts receivables in fifth grade terminology? Well, here we go. The definition of accounts receivables, it says accounts receivables is the money that a company's customers owe for products or services that have been invoiced but not yet paid for. So if I had to explain that to, somebody that is in the 12th grade, right? Here's what I would tell them, son, young lady, you're getting off to go into the world. Whenever you go into the world, you're going to have to find a place to live. You're going to either rent a house or rent an apartment. If you go rent a house or an apartment, that house or an apartment might charge you $1,000 a month in rent. In your mind, you have to come up with $1,000. But in the landlord's mind, they just got $12,000 of revenue, even though that you didn't pay for it yet. Because why? According to the accounts receivables line, which will be on a person's balance sheet, right? That is $12,000 that they can account for as income, okay? Because the person owes them that money. Well, Dwayne, how in the hell does that benefit me as a business owner? Well, there is another term called B2B transactions, business to business transactions. And when you understand these terminology, what you understand is a bank, a financial institutions, a credit card company, they will give you funding, money in your hand based on your accounts receivables. Well, Dwayne, what do you mean by that? That means that if I took a contract to a bank, my accounts receivables to a bank, and it showed that I have accounts receivables of $12,000 coming to me, I can go to them and they will let me give me a line of credit or lend me up to $6,000 for that. Why? Because they know that I got to get that money because I have a contract for it. So again, Dwayne, what does that have to do with me being a business owner? Well, when I asked you, did you have 5 people to borrow from? I pulled up this screen because I want you to pay attention. Get your pen and your paper. First and foremost, there's a company that I process all of my credit card payments through, and it's called Stripe, right? Why do I process credit card payments through Stripe? Well, Stripe as a credit card processing company, will do one thing for you. You ready? You applying for financing through Stripe Capital does not require a personal credit check. Now, everybody and their mama trying to fix credit. Everybody got a credit issue. And the last thing that you're trying to do is figure out how to go pay somebody to fix my credit. I got to fix my credit. I got to do all of this stuff. And what I am telling you, register your corporation with a credit card processing company. You can apply for financing. Your credit out the window. See, we remove that hurdle out your way. Credit gone. The next thing, how do I build business credit? Well, keep reading. Additionally, Stripe Capital reports performance for U.S. businesses to the Small Business Financial Exchange. Wait a minute, did I understand that correctly? I can process payments through this company, get a loan, they not check my credit, and they build my business credit? Well, Dwayne, how do I do that? I don't have no customers. Who said that? You see? I'm trying to get your mind to expand. I don't have no revenue. Who said that? Let me back in the day, somebody said one time, they said, let me learn you something. You know, that old Louisiana talk, right? Let me learn you something. Catch this. You ready? If you came to see that there's an amazing company out there, y'all. If y'all never heard of this company, hold on, let me pull it up real quick. There's a company. If you never heard of this company, you're losing. There's a company called Mac Enterprise Consulting. That is one of the best consulting firms on the market because that company has a CEO that literally comes on social media and literally teaches people how to build wealth and build success. If y'all don't know nothing about this company, something is wrong. But anyway, so what happens is the CEO of Mac Enterprise Consulting teaches people how to build a legacy and teaches people how they can go get money. So here's how it happens. So you're going to go to this company and you're going to say, hey, Dwayne, I want you to sign me up. I want to get the legacy builder. I want you to open me an operating company, a parent company, a real estate investment trust, a holding company. I want you to open that for me. Now, in your mind, you're still asking yourself, well, what the hell am I going to do with that? I ain't got no customers. Okay. Here's where it gets good. I'm going to open this for you. And you know what I'm going to tell you to do? I'm going to say, hey, go take $1,000. Mm-hmm. You're going to go deposit $1,000 into the operating company account and let it sit there. Okay. 1 week later, the operating company is going to receive an invoice from the parent company. Let's say we call your operating company ABC Lemonade. We're going to call your corporate office ABC Lemonade Incorporated. ABC Lemonade Incorporated, parent company, is going to send an invoice to ABC Lemonade operating company for using the name. Look, because you're using my name, I'm going to charge you $1,000. So now the $1,000 cash that you deposited into the operating company has now been deposited in the parent company by way of them making a payment. Okay, cool. So now your parent company has an invoice. Has the $1,000. All of a sudden, your real estate investment trust, which is your property management company, the landlord, sends the parent company an invoice for $1,000. They look, since you're using that address, I got to charge you $1,000. Cool, not a problem. So now the real estate investment trust has $1,000. 1 week later, you get an invoice from the holding company. Look, since I got to hold all them assets that you got coming this way, I'm going to charge you $1,000. So now the landlord paid the holding company and that money just sat there. All of a sudden, the operating company felt jealous. Look, since I set this up, since I introduced all of y'all together, I want my finder's fee. So now the operating company invoiced the holding company. So look at what you just did. You took $1,000 and you made it look like each company had a deposit of $1,000. Now, what happens? Catch this, y'all. You do that 4 times in 1 month. Uh-oh. That means each company will have an accounts receivables line of $48,000. That means that each company will get a loan, no credit check at all, for $24,000. 24, 24, 24, 24. You just took $1,000 and got yourself a $96,000 loan and ain't never used your credit score. You see how wealthy people think? They create money all by showing money is moving. And over here, you pedaling around with that old LLC, thinking that it's doing something for you, but it ain't doing nothing but having you run on a hamster wheel going nowhere. Now, any questions? I didn't give y'all a lot of information. I swear, I did. My bad. I didn't got a little excited. Any questions? I'll pause just in case somebody has a question. Thank you, cuz. Thank you. They don't teach this at UL. No shade thrown, right? How will the name of the how will name the REIT in the holding company? Can you ask that again? So the real estate investment trust is a property management company, right? That's it. So if you're into real estate investment, stop getting your real estate in LLCs. So if you have an LLC already, you have to create a new one under the corp. We would just convert your current LLC into a corporation. We do that for people as well. If you log on to we do LLC to corp conversions. And Jay, I see she put a link in the chat. You can just use that link and click the services tab. Once you click the services tab using that link, um, I'm sorry, you would just go ahead and locate LLC to corp conversion and we can get it done for you. Now, most people, if you're into let me ask you, is anybody into real estate investment in here? If you're into real estate investment, type me. If you have some real estate, just type me. Let me bless you real quick. Hello, Ms. Johnson. How you doing? So, people that are into real estate investing, let me bless your life real quick. Hold on, don't go nowhere. All right, you ready? What's up, Gator? Hello, Figure Fit and Fashions. Here we go. I'm about to bless y'all when it comes to this old real estate game. Here we go. Number one, Dwayne. Now, this is just Dwayne. That's just is my advice. Y'all ain't got to listen to me, right? But this is just my advice. I must share a few things with you. First of all, Real Estate Investment Trust is a company that owns or operates or finances income producing real estate across a range of real estate. Hey, Brandon. Hey, I didn't know that was you, Gator Bacon. I swear on everything I love. I thought that was somebody else. What's up, Brandon? How you doing, man? Thanks for being here. So let me help you out with some. So a real estate investment trust, right? Is basically a company that owns or operates and or finances income producing property. So in other words, it's a property management company, right? Why is this such importance? Because what I want you to understand is whenever you have a real estate investment trust, the rules to real estate change a little bit, right? Now, before I tell you anything about it, let me go ahead and preference this, right? Wealthy people have already, uncovered that whenever you open a company in a state like Wyoming, Delaware, and things of that nature, though, and you don't have to live there. Let me say that you do not have to live there, right? What they have understood was if there's such those states have so many tax advantages, especially when it comes for businesses, right? Because Wyoming does not have an individual income tax, nor does Wyoming have a corporate tax. So what does that really mean? That means that typically when I open companies for people, I'm always opening companies in the state of Wyoming, especially the holding company. The holding company will always be in Wyoming because remember, Wyoming doesn't have any tax. Now, what does that have to do with real estate? Well, here's where it gets good. So because a real estate investment trust is a property management company, they got to do certain things. Well, here's what happens. According to their structure, real estate investment trusts are required to pay out 90% of their taxable income to the shareholders in the form of dividends. Hold on. This provision allows for real estate investment trusts to receive exemptions. Hold on. From corporate income taxes. Wait a minute. A real estate investment trust is required to pay 90% of all the money that it makes back to the shareholder. Well, what happens when the majority shareholder is the holding company that sits in a state that already don't have no taxes? And they automatically have exemptions from corporate income taxes anyway. Do you not see what I'm trying to say? That means we have just shown how 90% of your taxable income, no taxes. Message. You see how wealthy people think? I know. Easy. I know. And you don't have to have 100 shareholders. No. No. Here's the thing. The point of this live is sincerely to just help educate people and put you in position to create your own financial freedom. You know, interestingly enough, y'all, I've been doing this a long time and I've made a lot of mistakes. And I've always vowed, and I made a promise to myself, I made a promise to God, I made a promise that every failure that I've ever had in life, that I would use that failure um, to help educate people. And that's what I do. There are a lot of people that are giving misinformation about the LLC, and I understand it because, you know, people are trying to create all of these different scenarios for how to make an LLC work. But what I try to do is get people to go to the root of it. It's not that you were doing anything wrong. You were just playing on the wrong field. The double taxation when it comes to corporation. I'm about to go open that can of worm for taxes. All right. All right. Y'all want me to open that can of worm for taxes as well when it comes to the corporation? I can. If you want to hear it, just type yes in the comments. This is gonna be mind blowing. If you want to hear about the double taxation rumor, just type yes in the comments. This is gonna be good. All right, y'all didn't open that can. Okay, I'm warning y'all. I have warned y'all. All right, here we go. Here we go. Let's talk about the double taxation. All right, number one, you got to promise. Don't call your tax person and cuss them out. All right, here we go. To start this conversation off, let me give you some ground rules. Ground rule number one. Let's get some things out the way. We all pay federal taxes. We all pay federal taxes, right? And we fall in the federal tax bracket of 10% to 37%. So for the sake of this conversation, and just for illustration purposes only, we're going to be using a number of $40,000. So as an individual who has a job, as a self-employed individual who has an LLC, all that good stuff, we all are subject to federal taxes. If you make $40,000, your federal tax will be about 12%. But know that we live in a country where not only do we have to pay federal taxes, we also have to pay Social Security and Medicare. And when you are self-employed and you work for yourself, the self-employment tax rate is 15.3%. So on $40,000, you're going to pay 12% in federal, and then you're going to pay an additional 15.3% for Social Security and Medicare. Now, that's 27.3% in taxes. Now, pay attention. Most people will try to steer you away from being a corporation because they're going to say, well, you're going to have to pay taxes twice. Two things that I want you to pay attention to. Remember when I told you? Hold on. I told you that whenever you hit a term, United States person, you ready? You are a person. That corporation is a person. So what happens is whenever you open a corporation, for the sake of the conversation, let's just say that you work for Walmart. When Walmart makes a profit, Walmart has to pay taxes. When Walmart pays you as an employee, you pay taxes. When people talk about double taxation, they forget to mention that you're the owner of Walmart too. You're the owner and the employee. But I want to kind of shift your thinking for a second. Because it is true. The profit of a corporation is taxed to the corporation when they earn it, and then it is taxed to the shareholder when distributed as a dividend. This creates double taxation. But here's what people are not telling you, that you are the owner of both. I mean, that you're the owner of the corporation and you happen to get a dividend from that corporation. But now I told you something that was true. Whenever you get paid $40,000, you have to pay federal taxes of 12%. You also have to pay Social Security, self-employment tax, which is 15.3%. But the corporate tax rate, a corporation must pay 21%. All right, so you got 27.3%. Now you got 21%. Well, what happens when that corporation pays you as a shareholder? Uh-oh. Uh-oh. It says it right here. And then it is taxed to the shareholders when distributed as a dividend. See, dividends are basically like multiplication and division. We're getting a portion of the business's income, right? Well, if you as a shareholder receive a portion of the business's profits, hold on, that doesn't mean that you have to take all of that money and put it in the bank and spend it. If you got paid from the company and you let that money sit for 62 days, that dividend, which would be an ordinary dividend, now turns into a qualified dividend, which means the tax bracket changed, all because you was patient and you let that money sit there. So if I go pull up the dividend tax bracket, especially the qualified dividend tax bracket, remember we're talking about $40,000. The average person, our tax bracket starts at 10% and it ends at 37%. The qualified dividend tax bracket starts at 0 and it ends at 20. Remember, we're talking about $40,000. So if I go look at how much taxes a person that's getting paid on a qualified dividend pays, if they make $40,000, here's what you're going to see. The tax rate is 0. Huh? If you're married, you can get up to $94,000 from your company every year and don't pay a cent. Don't pay a nickel in taxes. You're trying not to pay taxes now, but you don't even know how it works. But hold on, I got one even better for you. I'm not done yet. Since we want to stay on the tax side, and I always said that words have meaning, words have power. The average person, all they want to do is write off everything. Hold on. Now I'm about to get into my pocket. Hold on. The definition of write-off is to dismiss someone or something as insignificant, to cancel the record of a bad debt, to acknowledge the loss of or failure to recover an asset. Well, wait a minute. I know that I want to write stuff off. And if somebody asks me, do I identify myself as a small business? Yes, I'm a small business. And I said, no, you're not a small business, because if I asked you when you opened your business, did you want it to be of a size less than normal or usual, you would have told me no. If I asked you if your business is insignificant or unimportant, you would have told me no. But yet you walk around and identifying yourself as a small business every day, and you're going to let somebody tell you that the definition of small means something for somebody else. No, the definition of small is small. The definition of limited is limited. The definition of dismissing something as insignificant or unimportant, that's exactly what it is. So instead of you finding a way to go ahead and write things off, let me show you what wealthy people do. You see, I always leave this for last because I want people to understand people don't just go open nonprofits because they just love people. People open nonprofits for a reason. When you go onto the IRS website and you pull up charitable contributions, hold on, what you start to realize right here, in most cases, in most cases, the amount of cash contributions taxpayers can deduct on a Schedule A is and as an itemized deduction is limited to a percentage, usually 60% of a taxpayer's adjusted gross income. But here's where it gets good. Qualified contributions are not subject to this limitation. An individual may deduct 100% of all of their adjusted gross income and give it and take a qualified deduction from it. What am I talking about? That means that you can donate every red cent of money. You don't have to write nothing off. You can take all of those profits and donate it to a qualified organization. Here we go. What qualifies as a qualified organization? Well, I'm glad you asked. A qualified organization consists of a community chest, a corporation, a trust, a fund, or a foundation organized in the United States. Tell me where you see a LLC on this screen. Tell me where you read LLC at. What you think? Every single time somebody just standing on TV with a big white check in their hand talking about they donating to a cause, that they just love that cause? That is a lie from the pits of hell. Charitable contributions were made for the wealthy people. Charitable contribution, the IRS tax code was made for wealthy people. What is wrong? And so the more you keep running away from the IRS, all the IRS is saying, oh, I ain't got to do nothing. I just got to keep putting it in the book. They ain't gonna read it anyway. Message. So before you start saying that it's the white man that keeps you held down, nope, it's you. You didn't go read. Period. Before you say because I'm a woman, because I'm a man, because I'm in pop, whatever those things that you qualify, that you identify yourself as, that's not what's stopping you. You just was too much in a hurry to go get stuff done without taking your time. You didn't go hire the right person to help you. You just wanted to do it your own way. And there it is. Period. So anybody can come on here and challenge me, and all I'm gonna ask them is, did you write the tax code? I'm just reading the tax code. Period. So if somebody asks me if I want it to be taxed once or twice, yeah, tax me twice. Yep. Please and thank you. So now, not only have I showed you how to separate yourself from the business, I showed you how to rotate money in between all of your businesses and go get money that you ain't ever have to use your social security number for. And here's what happens in my line of work. You ready? I can teach people all this stuff all day long. And some people gonna still do the same thing over and over. And they're gonna say, I'm gonna take care of it next week. There you go. Story of my life. I'm gonna get with you tomorrow. Ah, you right. That part. That part. So, with that being said, any other questions? Y'all done got me all fired up over here. I know it's tough. Warren Buffett been doing it. Everybody been doing it. Wealthy people know what it is. I just got told no too many times until I went and figured out why I was being told no. And when I found out why I was being told no, you right. And I went so far. I wrote a letter to the White House. That's how far, that's how bad I wanted to know it. And the best thing they could have told me in 2022 was no, because it forced me to go unlearn everything that I ever knew and reread the tax code for myself. And once I read the tax code for myself and I went read it for myself and I understood, well, wait a minute, this is how they doing it? Oh, that's it. Y'all done gave me the playbook. If I don't follow the playbook, that's on me. I can't blame nobody else. So again, I'll be more than happy to help anybody that needs some help. Again, this is what I do for a living, and I know it. Um, again, just depends on what are you doing. A charitable cause. What I do. So just again, let me address the other elephant in the room. What makes me qualified to be able to read? Well, my name is Dwayne Williams. I sit in the CEO chair of Mac Enterprise Consulting. I also sit in the CEO chair of Mac Enterprise Tax Services as well. I have a master's degree in business. I was in my PhD program for about a year, but I dropped out. If you ever board a cruise ship, ever in life, ever in life, ever in life, and you happen to take a cruise on Royal Caribbean Cruise Lines, Royal Caribbean is going to make you download an app to use on their ship, on their cruise, on their vessel, to make sure that you have the best experience that you can have. I was responsible for helping to build that application. I traveled back and forth to Miami for about a year and a half. I am also a two-time best-selling international author. I've written 2 books in my life, and I've done a lot of great things. I've seen the world. I've traveled the world. I've made a lot of other people money. I've sat around and I've watched Netflix time and time again, watching other people live the dream that I live and that I wanted to live. And I decided that I wanted to create my own financial freedom, and I wanted to create a space for me and my family. My wife and I, we also recently opened a wedding venue. That's probably about a $2 million project. And I was able to go get some funding for that as well. I've done a lot of great things, but I've also made a lot of mistakes in life. I'm an individual. I've shared this publicly in my books. As a young man, I was molested as a kid. I've been through everything that you can possibly think that would try to stop you from getting to the next level. So I can empathize, I can relate. What I can also do is understand how people go through battles and traumas, and they carry those things into other pieces of their life. So when I became a business owner, I knew that I wanted to affect and change the world. And that's exactly what I try to do. I try to educate people every single day to try to help them see that you can actually leave a legacy for your family. But in order for you to leave the legacy, you have to build the legacy. No one is coming to save you. If opportunity came knock on your door, you don't have the luxury to tell opportunity, give me time to get it together, because opportunity is just going to walk right past you and say, you know what? You was not ready. So my job is to make sure that I put you in a position to always be ready for when the next opportunity comes for yourself. I work with people. I take people on what I call the journey to business planning. Business success. I help people with business plans. I help them create their own identity. I help people register their business properly. I also help when it comes to building a website, the logo. I help people when it comes to business credit. In addition to, we help with all of your bookkeeping and your tax and all of those things. We help you with that as well. But we also help establish credibility for your business. We register you with the Better Business Bureau, sam.gov. We help you with some contract templates that you can use for your business to business contracts. And we also help with protecting your business. We provide you some insurance recommendations, trademark applications, copyright applications, and we also set up trusts. We do a lot of those different things, and throughout the year, you're going to need help. So we help you. Um, with the business in a lot of different ways. Um, and and then the way that I help people is there's a number of different ways that I can help you. Number one, I have a class that teaches people all of this stuff. It's an online self-paced class where you can register for the class, and this is me talking for 9 hours. I have 6 videos. Why is the journey to success so important? How to write a business plan, everything about the structures, how to get credit, how to go get funding, how to build a legacy. I give you some ebooks. I also have what I call Business Owner University. And what I mean by that is every other Tuesday at 7 p.m. Central, every other Tuesday at 7 p.m. Central, I I have business owners come to night school, right? And basically for $20 a month, that's literally less than you pay in DoorDash, less than you pay with Netflix and Amazon Prime put together. For $20 a month, I give people 2 classes. We teach about automation, we teach about SEO, we teach about credit, we teach about everything that is needed to run your business. And I help people by giving them that class. I also help people by having people understand that, hey, if you want, I can set all of these up for you so you can start this rotation to get yourself some funding. And honestly, you can go on my website to open up all 5 companies: your nonprofit, your holding company, your parent company, your operating company, your real estate investment trust. It'll be $24.99, right? And at that point, I'm going to also register you and submit your 501c3 application for you, so you'll be ready to go. In addition to that, last but not least, what a lot of times people come to me for is say, Dwayne, do you do any mentorship? I do. I have a mentorship program. It's $300 an hour, and I can work with you throughout your business to put you on the next level. I can 100% guarantee that while I may not be the best person for you, I can honestly tell you that I have the best information for you. And the reason why I say I may not be the best person for some, because I am a very no excuse type person. We can sit around and talk about all the excuses in the world, but unfortunately, I don't have that kind of time. If you want to just share your excuses, do that with someone else. Come to me because you want me to help you so we can focus on putting you on the right path to success. We don't have time, nor the energy, nor the finances to change what happened yesterday. I can't, but I can help affect what's going to change tomorrow, right? So again, I would love for you to work with me. I would love to help you. And as Jay mentioned, if you sign up using her link, um, she can go ahead and help you get the things that you need, right? I will be more than happy to make myself available. If you need a consultation, we also have that, right? If you click consultations, I also offer free business assessments. If you just want to see where your business is from a scale from 0 to 100%, you can click this free business assessment and I'll go ahead and help you with that, right? Do you need members to open a nonprofit? Absolutely not. Well, take that back. Let me back up. Let me back up, Miss Alexis. I don't want to lead you wrong. A nonprofit, when you open it, is just a regular business, right? You have to submit your application for your 501c3. And yes, you want at least two, at a minimum of 2 people. I have a nonprofit. It's called Dear Business Owner. Me and my right hand when it comes to this is basically um, his name is Cliff Roy. He is the CEO of Penn Business Solutions, and he and I run a nonprofit organization called Dear Business Owner. Jay, I love to see the dust settling and the real voices are emerging through the taking mindset and fluff. Thanks for staying with the fight. Oh, cool deal. Jay, congratulations. That's what's up. So again, if anyone needs any help, I'll be more than happy to help you. Sincerely. Just know that I'm here for you and I would love to work with you. Everyone have a great evening and thanks for your time. Peace.